Welcome back, everybody, to the Investors Roundtable. I'm your host, Robert Kraft. Coming to you, actually, I'm back in my office. The first time, according to my calendar, since August 14th. So, it's nice to be back. And joining us today for this panel, I'm going to go counterclockwise from what I'm seeing. We got Mark Tobin from Coffee MicroCaps. Mark, what's going on, man? We got Stephen Kiel from Arquitos Capital. Stephen, what's happening?
Good to see you. Thanks for having us.
Of course. And then, of course, Andy Preikschat from Edgebrook Partners. Andy, what's going on, man?
Great. Awesome to be here again.
Great to have you. All right. So today's topic was a great suggestion. It was sent in by this random dude named Mark Tobin, who I guess is also now joining us on the panel. We figured this would just be his shot to just do an hour-long monologue, right, Stephen? We were just going to throw it to him, let him talk, But it's a smart guy, So, but I figured we could also throw it to everybody else on here too. So today's topic is, are AGMs dead or a vital tool to gain differential insights and implement shareholder activism? It's a lot to unpack today, but we're going to start, from the top down. We're going to do a little definitions first for those who may not even know what an AGM is. So, Mark, the floor is yours. Just, start us off with, a little bit about what an AGM is and why public companies need to do these.
So an AGM stands for Annual General Meeting. Happens on an annual basis, generally after the final set of results or final quarter results come out for the year. They're generally fairly standard, boring events, can be, where the audited set of financials are tabled in front of the shareholders. The shareholders vote on this to accept them. And in recent years, then they've also kind of been used to kind of approve other kind of corporate policies in terms of executive remuneration. Environmental policies have become a much more hot button topic at AGMs over the last probably 10 years. And then you also have, the re-election or appointment of new directors to the I guess supervisory board of the company. So that could be a new chairman, new non-exec directors, exec directors. So while it doesn't I guess scream as an exciting event, there's actually quite a lot of important business happens at the event, especially when it comes to election of directors, changes in directors, and I guess shareholders expressing a view on remuneration policies and environmental policies. Can be a very clear signaling tool to the board that the shareholder base might be unhappy with those policies in their current form.
All right, that was a good kickoff point there. And, for those who may want to think like, okay, AGM, I got the definition, what's a well-known one? Well, I think probably the most well-known one is everybody making their pilgrimage to Omaha for the Berkshire Hathaway meeting. That is an example of an AGM. Tesla they have their AGM, but they have all these other days too, Battery Day and whatnot. But, they also have a very well-known AGM because it's your opportunity to hear some of the Warren Buffett, the Elon Musk, to really talk at length about their businesses and reflect not just on what happened in the last year, kind of give some forecasts for the year ahead, but then also maybe give their outlook from a macro perspective and how their business fits in to what's going on there. So that's kind of full disclosure. I am not a shareholder of Berkshire or Tesla or Starbucks for that matter, for those who are seeing me drinking this right now. I just got to make sure that's clear. So let's dig right in then. At the suggestion of Andy, because I don't like taking credit for anything. So Andy had a great idea that we should split this into two halves where, on the first half, we talk about why this is a vital tool and or maybe potentially not for the first half. And then we're going to get into how do you implement shareholder activism now when these AGMs do come up. So let's dig into why these are vital. Stephen, for you, as actually running a public company, why is the AGM important for you as a CEO?
Yeah, from the company's perspective, it's a great opportunity to meet with your shareholders. It's been a little bit disappointing this year having to do it virtually. The meetings, we held our shareholder meeting virtually, and then the other companies that I've called into as an investor or as, company I might be following, the question and answer period really has been non-existent with some of the smaller companies, which is a little bit disappointing, because sometimes that interaction can really yield some valuable information as a shareholder. But from the company's perspective, I think there's really two sides. Some companies want to hide, right? Some companies don't really want to interact with investors. They see investors and shareholders as a distraction, maybe, sometimes they do get harassed, especially in smaller companies. There's some gadflies on the smaller, and maybe some of those gadflies are us. But, a company may look at it in that way and then just put up a wall and not want to communicate and set rules where they just are not there to answer questions. They try to limit them as much as possible. And then on the other spectrum, which I think is the more responsible thing to do, and what we do, is we'll stay there all day and answer questions. We take the Berkshire approach, we take the Fairfax approach, the Daily Journal approach, things like that. Boston Omaha does another great annual meeting as well. For those of you who might want to follow them, I don't own shares in any of those companies, but follow them all. And it's great. You sit there, you do the business you need to do, which is necessary. And then you are able to interact with investors and shareholders, answer questions, build trust as well, because there's something about being respectful, even when you get challenged, to carefully consider the complaint or the question or whatever that might be challenged. And, sometimes there's information confidential or behind the scenes that a company just is not able to share. And so there's a reasonable reason why the shareholder might not, have the full picture. And that's okay. You can share that. You can share that this is, we've had discussions at the board level, et cetera, et cetera. But that's how you build trust, to know that, face to face, you're shaking hands. I mean, in a normal environment, maybe we're fist bumping next year, but exactly, elbow or the foot, whatever we're doing. And hopefully we can do it next year. But I think seeing people in person, welcoming them in, showing that you're respectful, that you're partners with the shareholders, you're aligned in every respect, is a nice way to build that shareholder base that is long-term oriented, and the company should be long-term oriented as well. And this is a tool to use to do that. And then on the same token, look, if you have a shareholder base of a bunch of smart long-term shareholders, they might have some great ideas. And that's an opportunity for them to begin to share it, or for you to build a relationship that they can share it offline after the fact. So I think it's positive all around. And even when you have someone who's, kind of negative or doesn't understand what's going on, fine. It's a good opportunity to kind of deal with it and show the other shareholders that you can be respectful to people all across the spectrum there. So I think too often companies just try to kind of stonewall, especially smaller companies. And I think maybe that's, they know they're not performing well, or there's an insecurity about kind of the work that they're doing. And, that's not the right way to go about things. I think from a company's perspective, this is an opportunity. It's not a burden.
I couldn't agree with that sentiment more. I mean, Andy, you want to pick up from there?
Yeah, well, I think our question is, AGM, to attend or not to attend, that is the question. So I've met with maybe 1,000 companies, but I haven't attended 1,000 AGMs, probably a couple dozen. So I guess a broader question is, what information do you really want to collect on a company as an investor? So the kind of way I think about it is, maybe there's three dimensions or three-dimensional views of a company. So the first dimensional view is kind of just seeing the press releases or the news. It's probably what 95% of investors do. They just kind of look at the news flow. Maybe they read the stock message boards. That's kind of a one-dimensional view. And the other extreme would be probably a three-dimensional view, which is you work as an executive in the company and you see everything. So that's probably a three-dimensional view. what I would say a two-dimensional view in between is to speak with management. So, and that's, I actually view that as a bit sacred, because, you know, the CEO and CFO don't have that much time often, and they're taking time out of their busy schedule to talk to you as an investor. So I'm trying to be really respectful of their time. But at the same time, management usually is on a script, so to speak. Like, they have kind of a message for shareholders. So the beauty of the AGM is I kind of see it as it's between talking to management and working in the company. So it's kind of a 2.5 dimensional view. So so the bonus for me for attending the AGM is to actually talk to the other directors. And I usually just ask them straight up, like, what their opinion on the company is, why are they on the board, why are they excited about the company. And sometimes if it's a small company, you could actually go around the conference room table, and they can kind of each share in 3 to 5 minutes, you know, why they're there. And a second cool aspect of the AGM is to meet kind of the VPs, or maybe the second level of employees underneath the CEO and CFO, because they usually don't have the script. So they're usually more off script, and they can even give you potentially a tour of the office, or even a demo, or a kind of a peek behind what's really going on. So that's why I go to the AGMs, is I would call that 2.5 dimensional view. And I have to admit, I've gone to 2 AGMs in the COVID times, and I was actually the only shareholder to show up on both of them. So, but it was great because I got a tour of both places and got to meet the VPs of both companies and some directors. So, again, it goes back to what your goal is. What dimension of information do you want on a company?
Well, Andy, I gotta follow up with you right there. I mean, for you, it's a 2-part question. You know, what type of information do you usually? I mean, I'm sure it's company dependent, but what's usually your goal when you're deciding whether or not to go to an AGM, and the type of information that you're looking to gather?
Well, you know, I've talked about my 3 filters that I've used before. So the first filter is I want to see a company kind of best in the world, so to speak, in their niche, like they're kind of world class in their niche. And then the second filter is they're ideally, you know, profitable or close to profitable, and then with the potential for 3 to 5x increase in the earnings and the valuation over 3 to 5 years. So usually going into the meeting, I already kind of have some determination on those two, but I'm really focused on my third filter, which is really assessing management. That's really a qualitative screen. So the cool thing is, when I'm usually going in, is I'm looking at the energy level of the management, but also energy level of the company, kind of a cultural energy level. And you kind of know sometimes walking in if there's a bunch of empty, you know, cubicles and guys are kind of not wanting to talk to you, versus it's high energy, everyone's on their feet, everyone's moving, doing things. You kind of can know sometimes the energy level after just spending some time there. And then the 2 other factors I kind of try to get into that are qualitative are understanding the company's focus on quality. And, you know, that can vary on what the type of the business is, but you kind of see their attention to quality. And it could be small things, but so a manufacturing company might be the ISO 9000, and again, you know, walk the floor and see how they're implementing like some very specialized quality things that maybe their competitors aren't. And then, so in addition to quality, look at also innovation. So what are they doing that's innovative compared to the competitors? So those are probably the 3 things I kind of look at a bit, or energy level, quality, and innovation. And I think you kind of get a sense of those 3 when you go in there, from the directors and from the key employees.
So from your perspective, and I'm sure Stephen and Mark would probably agree, is that one of the best things about going to AGMs is getting that qualitative knowledge, you know, getting stuff that you don't just see on paper, that you can then, you know, confirm once you're there and make sure your math is right, so to speak.
Yeah, but you know, that actually is, it can be, you know, sorry to cut you off there, Bobby.
No.
Yeah, to interject briefly, you do have to be careful, because, typically the CEO of a company is a salesman. He's the chief salesman or saleswoman. That's how they get to that role. And so this is the value of kind of going year after year after year and having a perspective on competitors and the industry as well, because you can be fooled by language. You can be fooled by the stories they tell that don't actually follow through. And the qualitative aspect, I think that Andy's referring to as well, is look, you do get a sense of the energy. You get absolutely, and that's definitely a reason to interact with employees, management, and the board. But you need to follow up to make sure, or to compare past statements from past years that they actually follow through on what they say. And look, you mentioned Elon Musk earlier. I mean, we might as well kind of troll this a little bit here, because everything is, we're going to do this in 2 years. We're going to do this in 3 years. And these things, just haven't, certain things have come about. So no disrespect to that. But some of the promises are so overbearing and overpromised that if you were a more sober shareholder, you would not put up with that kind of puffery. Right. And so with a smaller company,
I like that.
Yeah, with a smaller company that's not Elon can get away with it. The little manufacturing company that's a $20, $30 million microcap, nanocap, is not going to be able to get away with it. And, as a potential shareholder or a shareholder, that's a good way to analyze a company.
No, you know what, Stephen, you're going right on the track. I was just going to ask too, is like, you go there, you're looking at this qualitative, and, there could be those days where at the AGM where the CEO or management's like, all right, everybody, you're on your game. All right. You go back to just sleeping if you won later, but you got to be on your game today. We got shareholders coming, so there's almost this feeling as a shareholder when you go to these things where you want to go in unbiased and very like, all right, let's see, but don't get too excited. But it's almost, how do you avoid having that confirmation bias when you do go to these things? Not just on the numbers that you've done going in to then confirm like, oh, my math, I think I'm on the right track, but then also on the qualitative side. Mark, let's what do you think about that? How do you avoid that confirmation bias?
Yeah, I think, some of the reasons, if I could just backtrack a little bit to go to the AGMs, like I'm a big believer in going to AGMs, especially for, as Andy said, these thousands of companies, might have been half a dozen. I think for your like bigger holdings, like it's a must if you can. Some of the reasons why you might go, I think interacting with directors, I think that's a great way to get differential insights on the company. Ask them, as Andy said, why they're excited, why they're in the board, what do they think of like the company's outlook or competitors. Some of the more established businesses that have been around for a while, I find the CEO founder might have moved into the chair position, and there's a CEO in there running it. So you would very rarely get to interact with the chairman, the founder of the business, and to then be able to chat to the founder. That's not an insight that most investors will ever get, other than his, chairman's letter in the annual report. The other good thing about going to AGMs, you meet other investors who are already invested. And, you can find these people sometimes, as good as Twitter is in FinTwit, and I'm a big Twitter user, that's another place where you can swap ideas, swap theses, insights they might have, especially if they're from the industry that the company operates in. I find, you go to these things and you might find a guy who's like a solar engineer who's invested in some kind of green energy company. Well, he's got a much bigger insight into the industry than I have. So that's another reason I like going to AGMs. And that qualitative thing, I think it's slightly different between Australia and America from what I can guess or gather from what you guys are. Almost no company holds their AGM at their registered office or their place of business in Australia. They're always, in some hall or function room at a hotel or whatever. Very, very rare you'll get an AGM. So that kind of, walking the shop floor, getting a tour of the facility, that wouldn't really happen in an Australian context. I think that might be a slight culture difference.
Any Australian CEOs listening, maybe, differentiate yourself, do that, but sorry, I cut you off.
Sometimes they do it at their auditor's office is maybe the closest thing you get, but I would say by and large,
That's kind of interesting.
all,
That's a
yeah,
whole
by
other.
and large they would, by and large they would, you know, they do it off-site. They don't rarely. I can't think of an AGM I've been to like that's been on-site at the like company's office. The qualitative thing, I think definitely you can pick up on culture of the company. I know maybe not in the AGM sense, but like on site tours, like that's one of the things I find with like microcap CEOs. You know, if they're walking around and they're like not paying attention to any of the staff, or they sometimes don't even know the staff's name, you know, that's a massive red flag for me that this guy is like, you know, sitting up here on a pedestal and he's just like, everybody else is just there. Whereas, you know, the good CEOs, they're walking around, you pass somebody in the corridor, they're like, hey, Bobby, hey, Stephen, you know, this is Stephen, he's our like head of sales, or, you know, whatever. They know everyone's name. It just, it's a slight indication, you know, this guy's invested, he knows the nuts and bolts of the business. And with microcap CEOs, you know, from them to the frontline customer, you know, is not a big gap. You know, if you're in a Fortune 500, S&P 500 company, you know, the difference between the CEO and the frontline is like huge. There's enormous levels of management in between. But I think at this, yeah, you can get a sense of that at the AGM. You know, biases, we got to guard against biases day in, day out. So, and I don't know anybody maybe that hasn't been affected by bias, no matter how much they try and control for it. So I think, yeah, I'd agree with Andy. Going to the AGM is a way to qualitatively get a feel for energy levels, culture, you know, what's the relationship between the CEO and the board? You know, you can also pick that up.
Yeah, great point. And I want to, if I could elaborate on what Mark said of meeting other shareholders and networking in that way. I mean, when I first started investing, I was a lawyer still before I started my firm, and I would go to some of these AGMs with some smaller companies. And there were people, you know, this was before kind of Twitter was big and you had those interactions. So some people had blogs, you know, sometimes you'd have some emails just back and forth, email lists. Sometimes you'd talk on the phone. And that was an opportunity to meet some of these investors in person for the first time. And some of them now, it goes back 15 years for me, plus that some of the people I actually met at some small cap and micro cap AGMs. And those people have not only been close friends, but some of them, I mean, Thomas Brazil, I remember meeting at, this was maybe 7 or 8 years ago at a small cap company AGM, and he's on the board of our company now. You know, that was the first opportunity for me to meet him in person. And there are a number of other, I mean, there's dozens and dozens of people who I consider, you know, people I trust, can rely upon, can I call up at any time for advice, that I first met in person at the AGMs. And then on the totally other end of the spectrum, you think of a Berkshire Hathaway, right? So you're not gaining any new information necessarily from a Berkshire meeting or a Fairfax meeting, but it's the idea that, you know, it's like going to church. It's a good reminder, right? And there's something a little bit different about doing it in person compared to even it's been streamed the last few years. And there's something about being in that crowd. It's like going to a live sporting event or a live music event that you feel the energy of the crowd. It helps to reinforce when you have so many long-term shareholders that are so disciplined, and Buffett's rationalism and Munger's rationalism just project out there. You know, you get that emotional feeling and commitment that you just don't get quite as much through a streaming or video or audio. And so, you know, both ends of the spectrum, networking, meeting people that you might have interacted with, or meeting them for the first time who are kind of like-minded in the things that you're interested in, the companies you're interested in. And then on the, you know, on the other kind of barbell end of it is feeling that discipline for you know, for a CEO, for Buffett, that you really trust and admire and were inspired by. You know, this is a way to kind of, you know, replenish your own discipline and rationalism, and it helps to absorb that in person.
Absolutely. I mean, and as a quick follow-up to that, because I'd say, you know, a lot of people listening to this might be on the retail side, you know, and not all of them have the ability to, you know, take a couple days, go to an AGM, you know, I mean, they might be with a company maybe that's local and take a couple hours, go to the AGM, you know, listen to a couple things and then leave, you know, but maybe what are some things that as a retail investor that isn't a professional, that, you know, can't just go and hop on a plane and go check out the AGM. What are some things that they can look for and suss out from a virtual AGM, which has been kind of the norm, as you said, for the last couple of years? And floor is open to everybody.
Yeah, I think one of the things for the retail guys, I mean, you know, it's the same, I think, for professional investors. You know, if you know, based in New York and your company AGM is in LA, you know, it's going to be a fairly decent sized position for somebody to fly, you know, across the country to go to it. So, you know, not all professional investors go to it. And I'm presuming now, correct me if I'm wrong, Stephen or Andy, you know, in Australia, all the AGMs tend to happen in November, which is like a big AGM month. So then you have like 2 or 3 AGMs that are happening on the same day, you know, maybe even at the same time. So you got to pick and choose which one you can go to. On the streaming side, you know, listen to the questions that are being asked. I think that can give you an insight to what other investors are thinking about, or which might be different to your thesis. I think that's one of, you know, the line of questioning. The other things they can get out is to like look after the event. You know, I always run my eye down over the percentages of for and against, abstain or whatever. And that can give you an insight if there's disquiet among shareholders, maybe more so on the institutional side, if, you know, because, you know, routinely, you know, directors, they get, you know, 90+ percentages in terms of like re-elections if they're already on the board. You see that like dropping down. Or the other big kind of key one for me is actually the abstain number. If you see a huge abstain number, that's an institutional shareholder who's like, I'm not voting against the company, but I'm not voting for you. It's kind of like a pseudo kind of covert message to say, hey, the next time these, like, you know, whatever, 5-10 million shares, you know, we might be going against you. So that can also be something to watch out for on the retail side. But yeah, retail, like professional people, you know, the professional guys aren't going to every single AGM because for cost and sometimes just like pure logistics that it, you know, it'll clash with another AGM at the possibly exact same time.
And there's one information gathering you can do that's actually usually stronger than going to AGM, which is to see the company's products kind of in the wild. So if it's a software company, you could ask for a demo. You know, you can do that remotely. Even pose as a customer. If it's a consumer product company, you could go see their products in retail, or I go to trade shows, for example, and that's often usually a great way to, because you can see all these companies stacked up that compete against each other and kind of interview them all in kind of one day or 1 hour even. But if it's an industrial company, then it's much harder. And usually you kind of have to go to the AGM and you kind of have to get the actual hands-on tour of the products. So this last AGM I went to was there's an aerospace manufacturing company, but the CEO actually gave me a tour, including looking at their circuit designs through a microscope. So it was pretty cool for me because it was all this patented stuff that actually is used by the Air Force and Navy that I could see. That would be an example of when you kind of have to go into the companies to see the industrial companies.
I could see Andy. Oh, sorry.
Oh, sorry. Go ahead, Bobby.
I was just gonna make a quip. I could see Andy at CES just going booth to booth, you know, with his huge yellow pad, saying, "Okay, all right."
Putting the schematics down.
Yeah.
Well, actually, I did go to like actually 2 or 3 trade shows for Expel. So I went to the Tint Off and the SEMA show, and so yeah, it's cool because then you can see the energy level of each booth. That's also a way to assess energy. So like if the competitors, if their guys are sitting down eating donuts versus the Expo guys are all standing up all day and with high energy, and you can kind of get a sense of the energy level just from the trade shows too.
Mm-hmm. I couldn't agree more.
Well, to Mark's point earlier, in the U.S., most of the meetings are kind of late April, May, or through May, through June, and that's basically based off the fiscal year. So once the 10K is filed, or once the quarters end, or annual is filed. I think you have so many days according to the SEC rules. So it depends on when your fiscal year ends, and most of them are 12/31 in the US here. But that makes it a little bit challenging because same thing in Mark. They might all be in November in Australia, and maybe they're all in May in the US, and there's a lot of them going on at any given time, and it can be tough to go to them, and especially as a retail investor, right? It's going to be difficult to fly across the country if you have a small investment. The flight might cost half of your investment or something like that. And but that being said, I mean, online, most of these companies do put up shareholder presentations. Sometimes they'll put up audio based on the presentations, even if they don't do kind of quarterly conference calls. They might have an investor day type of thing that's worthwhile to look at. I think what I would recommend is the presentations, kind of to my point earlier, right, where you want to compare past statements to future work. And then if there's some deviation, is there an explanation for it, or is it just glossed over and forgotten? And so you can look at the presentations sometimes, every year, whenever they first go back 5 years or 7 years. And when you first start following a company, I would say when you receive that presentation, go ahead and save that in your own files, because it might disappear from the interwebs when the new one pops up, or you might have to go through the SEC filings if an 8K was filed, which is not always required to be filed for those presentations. But look at it, compare it year over year, and then if there is a deviation and there's not some explanation, call the company and ask and see what their answer is. So there's still opportunities we're in a remote virtual environment, but it's still opportunities even when actual live AGMs are going on for a retail shareholder to follow along and, have the opportunity to kind of hold management or the board accountable in some way.
Absolutely. So now I want to play. Oh, sorry.
By the way, we should probably also draw the line as to what's too much information gathering at AGM. So, because usually when I show up to these, if I'm like one of the only shareholders that shows up, I will not be allowed to actually be in the room when they're voting, or they're on certain matters. So there is usually a line that, as a shareholder, I can't usually cross some information gathering that just the board level would only be able to see. So, I mean, my goal as an investor to know almost as much as a board member without being a board member. But and if some people have said, "Hey, is that inside information, Andy? Like, what are you doing?" But under mosaic theory, right? It's kind of one of the things we study with CFA is you can put together a mosaic kind of the company, meaning you can collect information from different places, and you basically put this mosaic together of your view of a company. So the inside information is really, two examples that have been prosecuted. One was knowing the earnings of a company before it's released and then acting on that, or knowing a buyout before it's announced and acting on that. So generally, what I do is I'm just using mosaic theory to kind of gather information, but I can't cross that line and go into any of these the board meetings.
That's a good point, Andy, because sometimes when you're talking to management or below that are not as adept with investor relations, they may accidentally share information that they really should not be sharing, and you should not be hearing. And it's important for someone like you and us, retail investor might not know otherwise, but for those of us, if that employee starts to go down that route, you just, sometimes it helps to put up the yield sign and explain it to them.
Yeah, I mean, it must be tough though when you're at the meeting too, because is it on you as the investor, or is it on them as the company to say, "Hey, Andy, mind waiting outside for 30 minutes? We got to do this, and then you can come back in." I mean, who is it, or is it on you sometimes to be like, I think I'm going to wait outside for like 30 minutes? Like, you would think it would be on the company, right, Andy? I mean, you've been in those situations. I mean, Steve, I'm assuming everybody here is.
Well, the risk is, probably on both sides. Well, the Reg FD is pretty strict, so they can't allow shareholders in on some of those things. Yeah.
Right.
Yeah, it's more, I think, the one-on-one, maybe side conversations that I'd be worried about. You're just kind of talking to some of the employees that are around, and and I'll be honest with you. I mean, when we hold our shareholder meeting, we have some management that they're just not involved in other parts of the business. We have a couple different businesses, and we do have a conversation before the meeting every year to say, look, you can certainly we want you to interact with shareholders, talk with them, but we have to be aware. People here are here to gather information, and there is certain information that's not already been publicly released. You just can't share. And if you have any problem, refer them over to us. But, part of the reason to go to these meetings is to sleuth as a shareholder. And, so there's some gamesmanship and things, related to that. But on the other hand, if you're talking most of these management, kind of lower management and below, they're not going to know some confidential information anyway, unless it's a really big deal, like a buyout or a divestiture or something like that.
So let's play devil's advocate real quick here, because one of the topic that Mark, I think I meant Mark sent this in. The other part of this question, we're going to get to the implement shareholder activism, but the question was, are they dead? Are AGMs really that important? I think collectively we made a pretty good case as to why they're very important and vital as a shareholder. If you're looking at a company and holding it, at all, whether it's the long term or short term, it's a great information gathering opportunity. But for argument's sake, why could it be perceived that an AGM or public company putting on an AGM is not that necessary?
Yeah, I'll take that one. I think Berkshire's AGM proves that they're not dead. If AGMs are done well, then they definitely will resonate with shareholders. And look, not every company is Berkshire, but you can still put on a good AGM. Disclosure, not a shareholder. But I think in Australia at least, and this might be a case now when they were still in hard lockdown, but a few companies which have an odd year end. So to Stephen's point, most companies in Australia match the tax year end in Australia, which is 30 June. So that's why they all fall in November. But a few companies who have December year ends then were having their AGMs in April, May. And, I dialed into a few of them just to see what the virtual experience would be like. And I would say there was probably more engagement than there would have been if they had ran an in-person one. So that also proves to me that if you can tailor it to be more shareholder friendly, you'll definitely get the response back. And a company I used to work for, we ran closed-end funds in Australia, and the AGM was always a very big deal for our shareholders. And now the funds have grown since I left, but I spoke to the chairman the other day, and he said they're big for their main. They've got about 5 or 6 closed-end funds, but for the main closed-end fund, the biggest one, the one that's been around for 20 years, they have over 1,000 people attend their AGM now. 1,000 people at any AGM for any company is, it's a hell of a lot of people these days. So I definitely don't think they're dead, but I think companies need to focus on making them a bit more shareholder friendly and a bit more engaging, rather than this prosaic, just getting the business of the meeting out of the way. We do the votes. Okay. Let's move on.
Yeah. I wonder next year, this year is kind of the first year where we've had a lot of these virtual ones. And I think a lot of companies, we're not fully prepared for that with how you do the structure. Maybe logistically things were fine, but how are they going to, for companies that wanted to encourage kind of that interaction and questions? I had a lot of ones that I called into this year. There were just no questions at all. There was no interaction. There was a little bit of a presentation, fine. But I could see that next year, I would imagine in the US, it'll still be encouraged, or at least possible, to do the virtual ones instead of in person. And maybe that'll be something that, now is going forward is a major option. And I hope that the companies that do want that interaction can determine a structure for the meeting to encourage it, because it really could be a valuable thing. Whether it's a live stream, kind of like Berkshire in that way, where there's a Q&A and we have a way for, even to have video involved. The ones I've called into, there might be video for the management, but it would be nice to have video, like a mass Zoom or something for the shareholders themselves. So you can have, kind of see name to a face and see the, that type of interaction. But I don't know, it might be a bridge too far. We'll see.
Andy, thoughts on this?
Well, I'm trying to look back at what's a beautiful AGM versus an ugly AGM, and Well,
That's a good question.
what's actually kind of scary is probably the most ugly AGMs look beautiful, but they're ugly underneath, meaning I've had a couple of AGMs where the company was clearly showing off. Like one was a mining company I visited that they were giving free helicopter rides around around the mountain, and they flew a plane over the mine I was doing a survey, which they usually do like once a year maybe, but they chose to do it just on the annual shareholder day to kind of show off. So a plane flying overhead, free helicopter rides, and they were just really kind of showing off. And maybe some of the hedge fund guys like that, but later on, the CEO actually ended up kind of lying to shareholders, and this company later was actually restructured. So I don't know. I'll just give an example that sometimes the show-offs, it may appear as a beautiful AGM, but there's a level of kind of pageantry that you have to kind of look through. And that kind of gets to Steve's point about kind of tracking them over time and kind of measuring them over time, and also seeing how direct their answers are to certain questions. You know, if you ask a very basic question, they give you kind of a tangential answer. That's usually a big red flag too. So I'm just sharing that kind of I would kind of share that that's probably an ugly AGM to watch out for is the pageantry.
Well, you know, having like 100 armed guards with AK-47s as you're walking into the mine, or flying over it and then landing and going into the mine, and you know.
The first thought to my mind was like, this has to be a junior mining company with like a sub 50 million market cap with like maybe 2 million in the bank. But no, let's go all out for our AGM and rent a helicopter all day. You know,
we're going to do a capital raise, so that, you know, that's just part of the transaction cost of the future capital raise.
Right, of course. Very good. All right, well, let's segue to the second half of this question, which was, you know, how do AGMs, as a result of them, you know, can you implement shareholder activism, you know, as a participant? Either, you know, let's just open it up to that point right there. So,
yeah,
you know,
let's start. Since I proposed it, let me kind of give you the feedback or maybe some context about where I'm coming from in that. So I think this goes back to the earlier point, you know, listening to the questions. And I think it's one of the few times where, you know, you can ask questions to the directors and the chairman about, you know, issues that you might be unhappy with, whether it's around capital allocation or capital management or, you know, company performance that's not going to the CEO because maybe you've been banging your head on quarterly earnings calls and not getting anywhere. So, you know, it's to raise the issue. And I find, you know, activism, it doesn't just come out of nowhere generally. It's usually as a result of kind of long-term underperformance. So, you know, the first sign will be these questions coming up. The second sign will be, you know, people starting to vote against the re-election of directors or against the REM report if they think, you know, executive pay is high. And from an Australian point of view, I mean, Stephen and Andy might be able to clarify on this. So, you know, if you're an over 5% shareholder, you know, you can table motions, you know, propose directors, all of that. But if you want to call an EGM in Australia, so outside of the normal AGM, you, the activist shareholder, need to pay for the full running costs of that event. And I mean, that can run into thousands of dollars. So, you know, a lot of activists like the AGM because it doesn't cost them anything to start getting the pressure on and expressing their views. Whereas if you want to completely roll the board, it's a high risk strategy that might not happen, and B, it could end up costing you a lot of money because that's on the activist's account, not on the company's account, because it's deemed outside the like normal course of business.
All right.
I've kind of found a rule of thumb, which, because I'm investing across public and private, and usually if you own about 5%, you can ask to be a board observer. I mean, that's especially in private companies. And if you own 10%, you can usually ask for a board seat. And I found this kind of consistent. I've seen across public and private. That
Yeah,
just
I
kind of
would say
rule of thumb.
Australia need to be 20% if you're going to push for a board seat. But that's maybe another kind of cross-cultural thing.
Yeah, and it depends, who, if there's a major shareholder out there, a lot of times, especially with smaller companies, you have the owner operator who, might own 30, 40, 50% of the company. And so, it's a different dynamic. You might own 5 or 10% and you're just not going to get that representation. But it also depends. I mean, be careful what you wish for. If you own 5, 6, 8, 10% of the company and now you do want some kind of representation there, and now you're going to be limited. I mean, you have to then be committed to this company over the long term, because you're really going to be limited in terms of changing or selling down your position or getting out for some reason. You can, in my perspective, as kind of a non-activist, as someone who maybe just wants to be able to have a productive conversation with management and the board when appropriate, is you want to build that trust and the positive relationship, even if you disagree with them, because, most of the time, one, do you want to be invested in a company where your interests are not aligned? Generally not. Now, if there's significant undervaluation and you think you can make some real change, go for it, do your thing. Realize it is going to be a commitment, financial commitment, time commitment, stress commitment, et cetera, et cetera. Some people are into that, more power to you. That's not my thing. But on the other hand, some companies are just underperforming somewhat, but they still have a great product. You think they still have a lot of positives. Management could be good, and they just need some advice. And you want to be able to build that relationship that you can share information, you can talk to them, you can get updates, you can get a better understanding of their strategy and how they're implementing it, and potentially holding them accountable in that way without necessarily being on the board. You can be a connected to the company, and sometimes that takes time. That's one of the reasons to go to the annual meetings too, is to build those relationships with the other directors.
Yeah, I think we would have all seen, activism has been, slowly moving down the market cap pyramid over time, and it's much more prevalent than it was, say, 10 years ago. So that's another reason I kind of, brought it up as, and, the first place it's going to rear its head, I think, is at the AGM. In a public format. I mean, there might be letters shooting across between the board and these investors ahead of time. Also not an activist, but yeah, I've kind of witnessed a few battles and been in a few battles when I worked at my previous role. And funny, one of the great benefits of the AGM, this is like a war story. So we had been, one of the funds that we managed had been pushing this company to do a kind of big capital return. We couldn't see why they were going the other way, and this had been going on for about a year. We felt we had a strong position with some other shareholders to maybe get some of our directors onto the board at the AGM. Anyway, we go to the AGM. Chairman stands up, announces a huge kind of capital return, kind of everything that we kind of asked for, pushing it. He announces this. It hasn't. I quickly checked my phone. Hasn't been announced to the exchange. So now anybody who was at the meeting now has got a heads up on the rest of the market. Me and the portfolio, we immediately run out of the room. We're on the phone to the brokers trying to buy us, well, I'm calling one, he's calling another one to buy as much. The circuit breaker kicks in, but I think we accumulated another 150,000 shares in the space of 3 minutes before the circuit breaker kicked in. And then about 5 minutes later, the actual announcement from the chairman hit the wires, but the stock was already up 30-40%, but we didn't care because we knew it was, when you did the maths, it should have been up 50%. So that's also a very good reason to go to the AGM.
It's interesting how slow sometimes information moves. I mean, I remember, and I was on with Bobby, it was a couple of weeks ago, a month ago or so, about this company called ALJ Regional Holdings. And this was back in 2013. They made an acquisition. They announced it, and it basically should have doubled the value of the company immediately. And you had 6 hours for this to go through, because not that many people were following the company. The press release came out and it hadn't been really picked up. And the company, it was basically the same price 6 hours later. The last 2 hours of the day, it doubled in price. And over the next 3 weeks, it doubled again. You know, and it's really amazing that I think, especially these smaller companies, if you have alerts set up, kind of immediate Google alerts, even the SEC filings usually come a little bit later, even from the news. And if they don't release the news in non-market hours, you really have an advantage to sit there. I don't advise you to sit there and stare at your screens all day for things like this, because maybe it only happens once every 3 or 4 years. But when it happens, man, you got to go all in and trust yourself and trust that the market will catch up to it.
Andy?
Well, kind of getting back to the activism or going on a board, I've been thinking about this too. Is when is the right time to go on a board? And I would say like less than 10% of fund managers and family offices are activists in any way, even Plan B activists. Usually they only step in if there's like an issue in the company. But I do feel that, so kind of 2 reasons that I think to potentially go on a board. One is that as a kind of a Plan B activist, you're seeing maybe some, it's happened sometimes in family controlled companies where they kind of treat the company as their piggy bank, and maybe there's some high compensation or they're kind of controlling a lot of decisions. I've seen some family offices and funds kind of fight that, including the Gates office where I worked. One of the positions I put on for them was Schnitzer Steel. We bought 10% of this company in the late 90s. And a few years after I left, Cascade actually got active and put someone on the board and kind of fought that family a little bit because they were getting too aggressive on how they were treating the company. So that's kind of one reason to go on the board, as a Plan B to kind of protect the minority shareholders. And maybe the second reason would be if you can actually add value to the company. So, and this is my opinion, but I kind of feel that if you're approving compensation or approving the audit, you're adding value, but you're not really adding significant value. Like, to me, adding value is like really helping the strategic direction of the company, or like helping really preserve the company's culture in some way. So I think about that a lot. Like, I've been on the board of a private company, but not a public, but I wouldn't probably go on the board unless one of those 2 scenarios, either Plan B felt was needed, or I could really add value to the company.
Just to follow up real quick, from the retail investor perspective, because more often than not, these are investors that are, not going to be acquiring a significant, percentage of the company or the shares outstanding, on the float, and so, but at the same time, they want to express maybe a potential grievance that they have or an issue, and management can easily just be like, okay, yeah, thank you for expressing your concern. I really appreciate that. Next, so what are ways in which, as mom and pop retail investor, you can really get your voice heard, and not just when you're investing in small microcap, nanocap companies, but just really in any public company. What's the approach so that you can have a legitimate point actually be heard?
Yeah, I'd take that one. I think for the retail guys, I think, just working through the proper channels straight off is like kind of the best bet. So like if they have a dedicated IR firm or an internal investor relations person, like go to them first, and, don't try and be emailing the chairman or the CEO. So I think that's the first point. Raising your points consistently and trying to garner, support from other shareholders. You can let them know, say, I've spoken to a lot of other kind of retail shareholders, we kind of feel the same. You can use it in your voting. Okay, it doesn't maybe count for a lot in the grand scheme of things with institutional concentration these days, but then you can look at the institutions, and if you see BlackRock, Vanguard, Fidelity, whoever is on the top of that list of the top 20 shareholders, and their fund manager, asset manager, email their corporate crew and say, like, what are you guys doing in terms of executive compensation, ESG issues, whatever you think could be improved at the company? I think this is the key point. I think, is it something that's going to improve company culture, performance, you know, governance at the company? If it's just, you know, something that you're a one-man band issue on, then, you know, you're never going to get far. But if it's part of a wider debate that's happening, you know, you can get on to the big fund managers and ask them and say, hey, look, I'm a shareholder in here, you are a shareholder, what's your company's position? You know, you can chuck $1,000 into one of their mutual funds and say, hey, I also, I mean, you know, I'm an investor in one of your funds, and, you know, what is your policy on XYZ for this company? So I think, you know, that's how retail investors can, you know, try to get their message across. And, you know, coming back to the activism thing, the few battles I've been involved in from my previous role, you know, we had a lot of retail investors who were contacting us because they saw us as the kind of forerunner or the kind of point person on this campaign, and they'll say, you know, we support you or we don't support you, or like, you know, what we often got both sides in terms of emails and phone calls. So, you know, getting your point across can be voting with the activists, or if you don't believe it, you getting your point across can be voting with the board when, you know, these topics come up.
My advice would be, don't be a martyr, sell, move on. It's not worth the brain damage. You're not going to make a difference. That's what I would say. If you're a retail investor, you don't have the ability to own a significant chunk of the company. The chance of you really being able to make a big difference is it's infinitesimal. You have to team up with someone else, but why go through the brain damage? Find a better company. Find a better company where you're going to be aligned, or ride the coattails of an activist that is doing the same thing that needs to be done for one of those companies, and just ride their coattails. Ride a coattail. It doesn't have to be an Ackman. It could be a Stillwell. It could be a Peter Kamen. You know, these types of companies, Lloyd Miller before he passed away, that would do these with smaller companies that you can ride along and do that. But, you know, if you have another job, if you're retired, you know, there's other things in your life you should be focused on, and you don't want to be dedicating a full-time, basically, job or position to attempting to be an activist when you don't even have the experience to do that. Yeah, I would say leave it to the professionals, either coattail them or move on. I mean, there's better investments out there. Go look for that 100-bagger. Stop wasting your time trying to, you know, make change for a 3-bagger.
Steven, you're killing my dream of being a corporate raider for Halloween this year. I mean, that's, you know.
Well, if you want to be the costume for a corporate raider is a bunch of knives in yourself, basically. Not worth the brain damage.
It's hard to walk away sometimes. I mean, even like I actually own almost about 5% of an Australian company, but this family controlled 60%. And they basically didn't even return calls of minority shareholders. Even me, I barely got a call back, you know, after many weeks of pestering them. So they had like 6 different related party transactions they were doing, and it was trading like 3 or 4 times earnings. And if they had just simply cleaned that up, and the stock would probably triple, but like they just didn't want to listen to minority shareholders. And I went to a trade show even to confront the management, and it was almost got physical. I mean, so I just basically, you know, had to say, this is not worth it. So I basically sold my position and moved on. So I guess if it's not worth it for me, then I'm sure it's not worth it for any individual investor.
Hold on. If that's any indication, they must have got you pretty pissed, because you're like one of the nicest people I've ever met. So like for them to really get you that fired up, that's pretty incredible.
Well, basically the family said don't talk to anyone in our company again, and it almost like with a clenched fist and like in my face. So I was like, whoa. So
yeah. Okay. So it was on their end getting all aggressive. Yeah.
Yeah. I mean, I don't know if I would. I'm not going to wrestle with this Australian guys.
Fair enough. Fair enough.
You're like, we'll settle this with some kangaroo boxing. You bring your kangaroo and I'll bring my kangaroo.
Oh my gosh. Oh my
You're
gosh.
like, wait till I call my friend Stephen over here. He's like
Yeah.
ex-military. He can,
Oh, yeah,
he can take
I
over.
need someone like that in my corner.
Yeah, you've got to come in with an entourage. That's how you can actually, that company, that mining company with the tours, you just have to engage a couple of their security guards, bring them down with you down to the Australian annual meeting, and you need some heavies behind you for sure. But that, it's a joke, but to be honest, that's what it takes in some of these cases with these activist positions, especially when it's family owned and they're kind of running it for their own benefit and not the benefit of the shareholders. It's a really tough situation. And look, Andy's a professional and he's going to be frustrated in some of these situations. So if you have another job and you're attempting to do this and you're doing it on the side as a retail investor, I mean, good luck. It's not worth the trouble. It's like wrestling with pigs, basically. Move on.
Fair enough. All right, guys. I think we're pretty much there. So let's get everybody's final takes as we close out this week here. I guess what is this? The first week of the fourth quarter. Give us your final takes going into this final quarter of the year, and where people can go and find more information. So we'll go counterclockwise again. So Mark, start us off.
So my new motto, I said before we came on air, survival is the new success in 2020. If you can get out this year, positive performance on your portfolio, or, you've still got a job, your business is still intact. It's been a good year, and I think, give yourself a pat on the back. Where to find out more about me, coffeemicrocaps.com, or probably Twitter's the best place to find me at C MicroCaps for all things Australian microcap.
Very good. Stephen?
Yeah, same advice here. Let's just get through this year and move on. Godspeed to 2021. You can find me at willowoakfunds.com. I also run Arquitos Capital, ARQUITOS. Just Google it or go to arquitos.com. And also active on Twitter, Stephen with a V _ Kiel, Kiel. Look forward to talking with you.
Thanks, Stephen. And Andy?
Yeah, I mean, some years kind of fly by and I feel like I don't age at all. And then some years creep by and I feel like I aged 3 years in 1 year. So that's kind of 2020 for me. So I'm also looking forward to next year. And, I'm also trying to stay positive. And I actually went to my bookshelves and I've got 500 books, about half on business and investing and half on like spiritual topics. I was trying to figure out what's the best book for this topic of AGMs. And I was thinking it's probably Dale Carnegie's book, The How to Win Friends and Influence People. Because basically I'm realizing that it's to criticize a company, I was just saying it's probably not worth it. Like you have to learn to make friends and that's really the way to kind of get closer to companies and closer to your investments. And so I'm really trying to be positive, and even though I'm frustrated with sometimes. So anyway, you can find me just my name, Andy Preikschat on Twitter and LinkedIn.
Very good. Well, again, my name is Robert Kraft. I'm your host. You can find me on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. You can you can watch every episode of the Investors Roundtable at youtube.com/SNN Wire. And I promise an audio only version is coming soon. I'm working on a logo. We're getting a logo together. So that you would think that, it takes a minute, you got to make sure it looks nice. But anyways, with that, thank you all for joining me today. This is a lot of fun. And I look forward to our next one.
Thanks, guys. Appreciate it.
Thanks, Bobby. Thanks, Steve. Thanks, Mark.